$88. That's what an ounce of silver is worth right now, today, on March 10th, 2026, as markets open. And if you told someone that just 2 years ago, they would have laughed you out of the room. But here we are. And the wild part? We're not even close to done. The Strait of Hormuz, one of the most strategically critical waterways on this entire planet, is closed right now as you watch this video. Crude oil touched $120 a barrel earlier today before crashing nearly 8% in a single session. Natural gas is creeping higher. And silver? Silver just crossed $88 an ounce and is up over 170% year over year. 170%. So the question I want to answer for you today is this. Is this the beginning of something much, much bigger? Or is this a peak? Because the answer to that question could change everything about how you position your wealth right now. Welcome back to Silver Signals, everyone. I'm Yali Jiang, and if you're new here, welcome. This channel is where we cut through all the noise and give you clear, honest, human analysis on precious metals, energy markets, and what it all means for your financial future. Whether you're a seasoned investor or you've just started paying attention to what's happening in the world, you are in exactly the right place today. And if you haven't subscribed yet, please hit that button right now. Because on a day like today, when markets are moving this fast and this dramatically, you do not want to miss a single update we put out. This community is growing, and I am genuinely grateful for every one of you who chooses to spend time here. So hit subscribe. Let's get into it. Today we are going to break down 3 things. First, what is actually happening in the oil market right now and why the crash today is more complicated than it looks. Second, we're going to talk about what this geopolitical chaos means for silver specifically, because silver is not just a safe haven metal. It is an industrial powerhouse, and the energy crisis actually feeds directly into silver demand in a way most people haven't thought about. And third, we're going to talk about the big picture. What the all-time high in January, the current price, and where silver could go from here tells us about the moment we are living through right now. Let's start with oil. Because understanding what happened in the energy markets today is the key to understanding everything else. This morning, WTI crude, that's West Texas Intermediate, the U.S. benchmark, opened near $85 a barrel. It spiked toward $91 within the first 90 minutes of trading. That's a big intraday move. And then, and this is the part that matters, it fell off a cliff. As of midday, WTI is trading around $87, down more than 8% from yesterday's close of nearly $95. Now, why did that happen? 2 things hit the market at almost exactly the same time. First, G7 energy ministers, that's the group of the world's 7 largest advanced economies, signaled that they are prepared to release strategic petroleum reserves. That's a coordinated intervention designed to flood the market with supply and bring prices down. The moment that headline hit, traders started selling. The second thing that happened is President Trump made a public statement suggesting that the conflict in the region, centered around Iran, could be brief. Now, I want to be careful here because geopolitical predictions are incredibly difficult, but in markets, perception drives prices in the short term. And the perception today shifted from prolonged crisis to potentially contained situation. That perception shift was enough to knock crude down 8% in one session. But here's the thing, and I want you to really hear this. The Strait of Hormuz is still closed. Today, right now, that waterway carries roughly 20% of the world's oil supply. Ships are not moving through it. And until they are, the underlying tension in energy markets has not gone away. It has been paused. And a paused crisis with strategic reserve releases can suppress prices temporarily, but it cannot replace the structural supply disruption if the closure continues. Brent crude, which is the international benchmark, is holding slightly higher, around $94, because the international market is pricing in slightly more concern about the global supply picture. The spread between Brent and WTI is wider than usual, and that tells you something. It tells you that global buyers are more nervous than U.S. domestic traders right now. And if you're wondering what this means for everyday people, retail gasoline prices in the United States are already averaging $3.40 a gallon. That's not a crisis number for Americans. But it is elevated. And if the Hormuz situation doesn't resolve quickly, that number moves higher. That creates real economic pressure on consumers, on businesses, on inflation expectations. And inflation expectations, as we know, are one of the most powerful drivers of precious metals demand. Here's what I want you to hold in your mind as we talk about silver. We are in a world where energy markets are being defined by geopolitical uncertainty, not just supply and demand fundamentals. And when geopolitical uncertainty rules energy markets, money looks for a home. It looks for something real, something that can't be printed, something that has held value for 5,000 years. That is why we are here. That is why silver is where it is today. Spot silver is trading between $88 and $89.50 per ounce right now. It is up roughly 2% on the day. And before we talk about what's happening today, I need to give you the full picture, because the context here is extraordinary. In January 2026, just 2 months ago, silver hit an all-time high of $121.64 per ounce. All-time high. We broke a record that had stood for decades, and since then, silver has pulled back. It's trading around 70% of that all-time high right now. But here's the number that should stop you in your tracks. Silver is up 170% year over year. Think about that for a second. If you put $10,000 into silver a year ago, you would have roughly $27,000 today. Your stock portfolio would need to outperform the S&P 500 by a factor of several times to match that. And yet, and this is what I find fascinating, the mainstream financial media is barely talking about it. Most people watching this video have friends and colleagues who have no idea what silver has done over the past 12 months. That asymmetry of awareness is actually really important for investors. So why is silver up 170%? There are multiple forces converging, and I want to walk through them because this is where it gets really interesting. First, safe haven demand. Every time there's a geopolitical shock, investors move into gold and silver. The Iran conflict, the Strait of Hormuz closure, the broader Middle East tension, all of it pushes money into precious metals. That's the obvious driver, and it's real. But it's actually the least interesting part of the silver story. Second, and this is the driver that most casual observers completely miss, industrial demand. Silver is not just a shiny metal that sits in a vault. It is a critical industrial input. It is used in solar panels, in electric vehicles, in semiconductors, in medical devices, in water purification. The green energy transition, regardless of what you think about it politically, is creating structural multi-decade demand for silver that did not exist at the same scale a decade ago. Here's the connection to today's energy crisis that I want you to really think about. When crude oil spikes, and it has spiked dramatically this year, governments and energy companies accelerate investment in alternative energy infrastructure, solar installations, EV charging networks, battery storage. Every single one of those technologies uses silver. So, the very crisis that is driving safe haven demand for silver is simultaneously accelerating the industrial build-out that drives structural silver demand. It is a double engine. Third, monetary debasement. Central banks around the world have been printing money at historic rates. The purchasing power of paper currencies has been eroding, and when currency loses value, hard assets gain value. Silver, like gold, benefits from the simple arithmetic of money supply growth. More dollars? Chasing the same ounce of silver means higher prices in dollar terms. I want to stop right here and ask you something, and I genuinely want to know your answer. Drop it in the comments below. When did you first start paying attention to silver? Was it during the last big run-up? Was it someone in your family who told you about it years ago? Or did you come across it recently because of everything happening in the world? I read every single comment on this channel, and the stories you all share genuinely influence the content I make. So tell me, what brought you to silver? Before I get to the big insight I want to leave you with today, I want to spend a moment on natural gas because it's telling us something important that oil is drowning out. Henry Hub. Natural gas is trading at $3.12 per million BTU today. It's up just slightly, about 0.18% on the day. And that stability is actually really interesting because oil is crashing and spiking dramatically, but natural gas is relatively calm. Why? Because natural gas supply chains are more regional. The US has abundant domestic supply. The Strait of Hormuz situation primarily disrupts liquefied natural gas, LNG, shipments more for Asia and Europe than for the American domestic market. But here's what the natural gas picture tells us about the medium term. If the oil supply disruption continues, if the Strait situation drags on for weeks rather than days, industrial and commercial users will start switching to natural gas where they can. That demand shift will eventually push gas prices up. And higher energy prices across the board are inflationary. And inflation, as we've talked about, is rocket fuel for silver. There's also a broader point about energy security that I think is profoundly underappreciated. The world just got a very loud reminder, again, that depending on a narrow, geopolitically vulnerable corridor for 20% of your oil supply is a massive structural risk. That reminder is going to accelerate energy diversification investments. Governments are going to increase spending on domestic energy alternatives. Corporations are going to accelerate timelines for electrification and efficiency upgrades. All of that requires silver. The geopolitical instability that rattles short-term markets is quietly building the medium and long-term case for silver demand in a way that is fundamental and durable. Okay, here's the insight I promised you, the one that I think most people are missing, even people who follow silver closely. We started this video with a shocking number, $88 an ounce. We talked about the January all-time high of $121. And a lot of people look at that and think, we had the big run-up. We hit the all-time high. Now we're pulling back. Maybe the best is behind us. I want to challenge that narrative directly. And I want to do it with one simple historical comparison. In 1980, during another period of acute geopolitical tension, runaway inflation, and energy crisis, silver hit what was then its all-time high. The Hunt brothers famously pushed it toward $50 an ounce. In 1980 dollars. If you adjust that figure for inflation using the Consumer Price Index, $50 in 1980 is equivalent to somewhere between $170 and $230 in today's purchasing power, depending on which inflation methodology you use. Silver just hit its all-time high of $121 in January 2026. In inflation-adjusted terms, that all-time high doesn't even match 1980. We have not, in real purchasing power terms, broken the 1980 record. Not even close. Now here's where it gets really important. In 1980, silver's industrial demand was a fraction of what it is today. Solar panels barely existed. Electric vehicles were science fiction. Semiconductors were early stage. The industrial demand multiplier that exists today, that we talked about earlier, simply was not present in 1980, which means the demand picture today is structurally stronger than it was when silver hit its previous inflation-adjusted peak. And we are still below that peak, in real terms, with a stronger fundamental demand picture, in the middle of an active geopolitical crisis, with monetary policy still historically loose by long-run standards. That is the thing that I want you to sit with. Because when I started this video with $88 an ounce as a shocking number, the real shock is that given everything we know about the forces at work right now, $88 might look like a bargain a few years from now. I'm not making a specific price prediction. Markets are unpredictable, and anyone who gives you a specific target with total confidence is selling you something. But the structural argument for silver's long-term value proposition is as strong as I have ever seen it. So let's bring this all the way back to where we started. Today is March 10th, 2026. The Strait of Hormuz is closed. Crude oil swung from near $120 to the mid-80s in a single session. Natural gas is holding steady, but quietly building a case for higher prices. And silver, sitting at $88 an ounce, up 170% in a year, coming off an all-time high just 2 months ago, is telling a story that almost nobody is reading clearly. The story is this. We are living through the convergence of geopolitical upheaval, monetary expansion, energy transition, and industrial transformation, all at the same time. And silver sits at the intersection of all four of those forces. That does not mean you should make reckless financial decisions. It does not mean you should put everything you have into silver tomorrow. Always invest thoughtfully, always manage risk, always do your own research. And please, consult a financial professional for personalized advice. But it does mean that staying informed, staying engaged, and understanding what is actually happening in these markets is genuinely important for your financial life. And that is what Silver Signals is here for. If you found today's video valuable, and I hope you did, the most powerful thing you can do is hit that like button right now. It takes 2 seconds, and it genuinely helps more people discover this content. And if you're not subscribed yet, please subscribe. We cover these markets every single week with the same level of depth and honesty, and I would love for you to be part of this community long term. And I am genuinely curious. From everything we talked about today, what are you watching most closely? The oil situation? The silver price? The inflation picture? Drop it in the comments. This is a conversation, not a lecture, and your perspective matters here. I'm Yali Jiang. Thank you so much for being here. Stay sharp, stay curious, and I'll see you in the next one.